Hi, my name is Jonathan Naranjo. I am the Senior Vice President of Luxury Real Estate in San Francisco, specializing in high-rise real estate and condominiums along with co-ops. We first heard about the Motus product when it launched, and it was really interesting because up until Motus was established and an offering to our communities and owners, there weren't really many options for owners of these beautiful communities and condos to insure themselves for risks and exposures as a direct result to earthquake. There were limited product options and solutions that tend to be costly, and the amount of coverage you get is a fraction of what Motus is able to deliver. So when Dan approached our real estate practice, being a leader of high-rise luxury condominiums and co-ops, it was a perfect synergy and a value-added solution we can offer our owners that are looking for something more to protect themselves from earthquake damage and earthquake-related losses that wasn't available in the market up until now. First and foremost, there's a term which most owners are very familiar with. It's called loss assessment. So in the event of a loss, owners have to pay their portion of that loss assessment, especially if it's a common area related matter, et cetera. What we found Motus to be such a viable option for owners is that on most homeowners policies, also known as HO6s, there is loss assessment provisions. However, earthquake tends to be an excluded peril. So how do you cover that? It's by purchasing a standalone earthquake policy. Now, what we found is that companies or agencies like the CEA, California Earthquake Authority, they're limited in the amount of coverage you can get for loss assessment. For example, the maximum cap through the CEA is $100,000 for an owner, where Motus can go upwards of $400,000, backed by some of the most prestigious and financially solvent earthquake carriers out there, such as ICW, etc. And I always say to my clients, there's never a problem until there's a problem. When you think about California earthquake, it's not a matter of if, it's a matter of when the next big one is going to occur. Oftentimes, we try to help the associations look at a master earthquake policy to reduce the financial expenditure that each owner would be responsible for in the event of a loss. Well, if the master is not something that can be budgeted for because oftentimes it's so expensive, Motus is the next best thing, especially for individual owners who are wanting to have some type of protection, but ultimately reducing their financial out-of-pocket responsibility by transferring that back to a Motus insurer that is backing the Motus program. So for example, ICW. Another example is Vico. These are insurance carriers that are not only supporting individual owners, but these are carriers that we work with on a master earthquake policy as well. And financial solvency is everything. If an insurance company is not rated at a high rate, doesn't have the capability or liquidity to pay their claims, well, that's going to put an association in great peril. And you want to make sure you're working with the best so that in the event of a claim, the last worry you need to worry about is whether it's going to be paid or not. And what I love about the Motus product solution and the experts who are educating our owners about the solution is the implementation. I mean, from start to finish, Motus is working with our owners to answer questions, to evaluate how their current coverage, if they have it, differentiates to a Motus option. And they are going to walk our owners through the implementation process. And through that, the rest of the community will be educated. The other thing that is so important is what we call loss amplification factors. Many of these properties and high rises in which we work with are in highly dense areas, downtown locations. And if that next big one happens, what's stopping damage from a neighboring building exacerbating the damage to what may have occurred to your direct building? So having this information is not to scare anyone, but it's simply to be realistic of what the worst possible scenarios could be and what that looks like in terms of solutions that can protect or reduce financial exposure and mitigating the risk in terms of what owners would be responsible for. Education is everything. We would rather educate and be forthright than allowing our owners to operate where there may be blind spots of what could potentially happen.